Stock picking is a very complicated process and investors have different approaches. However, it is wise to follow general steps to minimize the risk of the investments. We bring you 3 basic steps for picking high-performance stocks. Step 1 is to decide on the time frame and the general strategy of the investment. This step will dictate the type of stocks you buy. Suppose you decide to be a long-term investor. You would want to find stocks that have sustainable competitive advantages along with stable growth. The key for finding these stocks is by looking at the historical performance of each stock over the past decades and do a simple business SWOT analysis on the company. If you decide to be a short-term investor, consider momentum trading and contrarian strategy. Momentum trading strategy looks for stocks that increase in both price and volume over the recent past. Most technical analyzers support this trading strategy. We advise you to look for stocks that have demonstrated stable and smooth rises in their prices. The idea is that when the stocks are not volatile, you can simply ride the uptrend until the trend breaks. Contrarian strategy looks for overreactions in the stock market. Researchers show that stock market is not always efficient. This means that prices do not always accurately represent the values of the stocks. When a company announces bad news, people panic and the price often drops below the stock's fair value. To decide whether a stock overreacted to news, you should look at the possibility of recovery from the impact of the bad news. For example, if the stock drops 20% after the company loses a legal case, that has no permanent damage to the business's brand and product, you can be confident that the market overreacted. We advise you to find a list of stocks that have recent drops in prices. Analyze the potential for a reversal through candlestick analysis. If the stocks demonstrate candlestick reversal patterns, go through the recent news to analyze the causes of the recent price drops. To determine the existence of oversold opportunities. Step 2 is to conduct researches that give you a selection of stocks that is consistent to your investment time frame and strategy. There are numerous stock screeners on the web that can help you find stocks according to your needs. Step 3 is to diversify from a list of chosen stocks in a way that gives the greatest reward to risk ratio. One way to do this is to conduct a Markowitz analysis for your portfolio. The analysis will give you the proportions of money you should allocate to each stock. This step is crucial because diversification is one of the free lunches in the investment world. These 3 steps should get you started in your quest to consistently make money in the stock market. They will deepen your knowledge about the financial markets and would provide a sense of confidence that helps you to make better trading decisions.